Okay, so we're going to take a look at 2017 question 2, the higher level paper. It's a cash flow question, and we're going to start off with the reconciliation of the operating profit to the net cash flow. So we're going to start off there with our operating profit, and just check your profit and loss here, and it's actually the first figure there, 157,000. So we have to adjust there the depreciation, and the depreciation has to be calculated, and just to run through that, the buildings depreciation was given at 42,000. Machinery you'll have to calculate, so it's just the difference between the two depreciations. It was 185,000 minus the 163,000, so that was 22,000 in total in depreciation. So you'll see that there the accumulated depreciation for 2015 was 163, it moved to 185 for 2016, so therefore we charged 22,000 depreciation. So total depreciation then was 64. So 64,000 was charged and subtracted to reduce our profit, and therefore we have to reverse that process, and we're going to add it back on. It's a non-cash item, so therefore we're moving profit to a cash figure. We'll reverse the non-cash items, so we'll add back in that depreciation figure. And there was also a loss on a disposal of a fixed asset, and you were actually given that figure there. So the question told us that there was a loss of 15,000 on that, so that 15,000 would have reduced our profits originally, so we're going to add that back on here. Then we have to look at stock, debtors and creditors and the movement in those. So if we take our stock, first of all, it moved from 144,000 to 151, so that's an increase in stock, and the value on that was 7,000, and we minus that figure here because an increase in a current asset will reduce your cash flow. And the debtors was also an increase, and you can just do it on your calculator there directly from the question. 135 moved to 148, so that was an increase of 13,000. So that's going to be minus there as well. And then we look to our creditors, and the creditors was a decrease. So a decrease in the creditors is also minus, and the value there is 30,000, and that's all we need in that section for the moment. So that tallies then at 186,000. And that is my net cash inflow from operating activities. Okay, and just to recap, if you have movement in stock, debtors, creditors, the rules are if there's an increase in a current asset, you minus it, like we had here. If there's a decrease in the current asset, it would be plus. An increase in the current liability would be a plus, or if there's a decrease in current liability, it would be a minus, like we had here. Okay, so the next part of the question is the cash flow itself. So we put in your heading. So it's the cash flow statement Grant Limited for the year ended 31st of the 12th, and it's 2016. So put in your heading, and we're going to start with that figure we just got. So it's the net cash flow from operating activity. So that's 186,000. Just transfer that figure down, and the next part then is to look at interest and then tax. So if we take the interest, which is really our return on investment, and it's also the servicing. Of finance. So our return on investment is interest that we've earned, and the servicing of the finance is the interest we pay on our debts. So interest paid, and our interest paid here is, I'll just do the working on it here. So the interest paid is made up of the charge for the year, which was 12,000, and you'll see that just here in the profit and loss statement. So the interest for the year, the charge is 12,000, and we also had an opening balance. At the first, so the opening balance, the closing, we'll say if you like, of interest due in 2015 was 3,400. So 3,400 was our opening, and we also have a closing interest due of 2,800. So we have to decipher then what we actually paid. So we add on the opening from last year and minus the closing at the end of this year to find what we've actually paid in interest. So our total there is 12,600. So interest paid then 12,600, and at this stage of the question, anything that's paid is a minus. And interest received. So on the interest received part, again we have to do a little working on it. So again we have the charge, or what we expected to receive. Investment income for the year was 2,000, and we look then to the current assets. So the investment income due at the beginning of the year was 400, and due at the end of the year was 300. So again, how much have we actually received, and the balance on that, we have to minus the 300, so we have actually received 2,100. So interest received 2,100, and again that's money in, so that will be a plus to our cash flow statement. So the next part of our question here, following on the cash flow, is the tax, and again we're looking for tax paid, so I'm just going to do a little working on that as well. So the charge for the year, back up here, tax for the year is 44,000, and again you always look for the opening balance and the closing balance, so it will be a creditor, and tax was opening there at 45,000. And closing, we currently owe 36,000. So again, we take out what is still due to be paid, so that 36,000 comes out. So what we've actually paid in tax is difference there of 53. So 53,000 is our tax figure. And again, it's obviously a minus. That's our tax paid. So the next heading then is capital expenditure and financial investment. So you're looking here at changes basically in the fixed assets and the financial assets of the organisation. So again, if we take investments and we look at sale of investments, and again, unless there's a note, you just go directly there. So we have 280 minus the 75, and that leaves us with 205 of change. So again, that's a decrease in investments. So we sold those investments and thereby released the investment back into our business. And we also have sale of buildings. So again, we know that we have a little working to do there on the buildings, so I'm just going to do that one. So buildings started out there at $635,000. And we know that they've moved then to 720,000. So that's an increase of $85,000. And we also know then that we purchased during the year 200,000 in buildings. So the net difference then is 115. So that's 115 is the change in buildings. So the depreciation has moved from 60,000 to 75,000, and that would indicate that there was a charge of 15,000 on buildings depreciation. However, we are told in the question that the depreciation on buildings was 42,000. So the difference then between the two of those is the 27,000, and that's the disposal depreciation that we must have charged and taken out of accumulated depreciation. So therefore the building that I had cost 115,000. So just to clarify, on the disposal I had a cost of 115,000. So the next thing we want to do is look at the purchase of machinery, and we know that the machinery started out at cost at 325, so I just want to do working on that. And they have moved down to 405, so There's no other information on it, so therefore we have purchased machinery of 80,000. So again, that's a minus. If we purchase, a minus to our cash flow. And continue on to look at our fixed assets. We also purchased buildings, and we were actually just given the figure there. We purchased buildings during the year 200,000. So again, that will be a minus to our cash flow. So again, you can just net then at that point again. So we'll retotal. So for the next piece, we want to look at dividends and dividends paid. So again, if we look at our statement, we were told the dividends paid were 32,000 and there's no sign of a liability there. So dividends paid simply 32,000 there. So again, once it's paid, it's a minus. So we can retotal then again 88,500, and that's the net cash inflow before liquid resources and financing. So then you want to look at the management of liquid resources. So in this section we'll start off first of all looking at the purchase of any government securities. And you just check here in your statement. So we've government securities started at 0 and now we have 40,000. So we invested 40,000 there in government securities. So again, that'll be a minus to our cash flow. And we also want to look then at financing. And in this section, you're really looking at changes in your debentures, in your ordinary share capital and share premium. So any movement in this part of the balance sheet, the final part of the balance sheet. So if we take a look at debentures, debentures moved from 350,000 to 180,000, so that's a decrease of 170,000. So that's a repayment on those. So we pay them back, so again that's a minus to our cash flow. And we also want to look here at ordinary shares. And if we look at our ordinary shares, they've moved from 580,000 to 700,000. So that's an increase in our ordinary shares of 120,000. So we gained financially, or in terms of cash flow, it's a plus 120,000. And we look at the share premium. And that has moved from 13 to 20, so that's a plus 7,000 there. And we can retotal then again at that. So that then is our overall increase in cash is 5,500. So the final piece of our cash flow is to reconcile the net cash that we just got to the movement in the net debt. So if we take the net cash figure, which was an increase, and that was 5,500 that we just got there in the last piece, and we want to reconcile that with movement in net debt. So if we look there at the government securities, we used cash to purchase those government securities, so there was 40,000 used there. And we also used money to repay our debentures. So again, the debenture movement there was 170,000. So if we just reverse the effect of that cash movement, it is for 215,500. That's the change. Change in net debt. So the net debt opening is made up of your debt, obviously your debenture loans, 350,000, your bank overdraft was 12,000, minus any cash or cash equivalents, so minus the 2,000 that was there in cash. Again, I'm just picking these up in the balance sheet. And at that stage we didn't have any government securities, so there's only 2,000 to offset against that. So the net debt opening was 360,000. So if I put that with the changes in the net debt, then my closing net debt should be 144,500. And again, it's all minus figure. And you can cross-check that final figure by looking at your balance sheet. So for the 2016, if I take my debentures, they were 180. If I look at my bank overdraft, that was 8, so that's 188 in debt. But I have cash of 3,500 and I now have the government securities of 40 to offset against that debt, so my net debt is 144,500. So you can check and see if your net debt closing figure balances correctly. So the final part of the question is a little bit of theory that first of all asks us to look at solvency, and this is the ability of a company to pay its debts as they fall due. If total assets are greater than the external liabilities, then a company is solvent. It also asks us to explain financial reporting standards, and the current standards for financial accounting is the FRS 102. This is a set of rules that apply to financial accounting, and it's to give a true and fair representation of the financial position of the company so that organisations are following the one set of standards. And finally, it asks for implications of reduced gearing. So that has implications for interest. If there's less debt, there's less repayment of interest, so that's good for the company. It means there's more profits available for dividends for the shareholders, so they would be happier. And it also means then if your gearing is low, a bank is more likely to lend you money, and because you have capacity to repay the interest and the loan, so it's easier to access finance. And there's less risk as there is less outside influence, and you're less vulnerable to fluctuations in interest rates as well.